Good morning, students. Yesterday we saw what all are the things to be kept in mind when we learned the next subheading coming under the lesson reconstitution of firm, that is retirement of a partner. Now from retirement we are moving on to the next subhead, that is death of a partner. That is another case wherein reconstitution of firm takes place. So just to brush up your memory, so far we saw the initial fundas of partnership through the lesson basics of partnership accounts. Then we moved on to reconstitution of firm, the main heading, with subheadings admission of a partner, retirement of a partner, and now we are moving on to death of a partner. Now what we will have to understand is what is the difference between retirement and death. Now in retirement we saw A, B and C were in partnership sharing profits or losses equally. C took a decision to quit his affairs with the firm because he was planning to move on to Germany to take care of his grandchild. But in the case of death, what happens is A, B and C were partners sharing profits or losses equally. Now all on a sudden B had a severe cardiac arrest and he was no more. So this is another case of reconstitution of firm, that is death of an existing partner. Now accountingly speaking, there is not much difference between retirement and death, because when retirement is out of the will of that person, decision of that person, death is out of God's will. All on a sudden it takes place. When death of a partner takes place all on a sudden, whatever he is eligible so far till the date of death will be paid. You cannot pay it to the dead partner. So his legal heir, that is legal heir, that is successor, maybe his wife, maybe his child, maybe his mother, as the case may be, or to the executor of his will. Suppose he has written a will, the will be executed by somebody. He is called executor of the will, legal executor. So in the case of death, when we make final settlement to the partner himself, in the case of death we will make final settlement to partner's legal successor or legal executor. That is another difference you will have to understand. Suppose partner has taken some funds for his personal purpose, which we technically call drawing. That is to be set off against the amount to be paid to him, and the final amount you will arrive at and you will pay to the deceased partner's legal heir or legal successor. So in this context, what I wanted to tell you is that compared to other lessons like admission, retirement, or even basics of partnership, in the case of death of a partner, normally we see in question papers to a larger extent 5 marks questions wherein they will ask you to prepare the deceased partner's capital account. DECEASCD, deceased means dead partner's capital account, and for heaven's sake it is not DISEASCD, that is sickness. Here deceased, DECEASCD means the dead partner's capital account, and that towards the fag end you cannot have a balance because he is no more, he is discontinuing with the firm. So whatever is coming as the final figure, you settle it off either by paying cash or to the legal executor or to the legal successor, as the case may be specified in the question. So in this lesson we will be focusing more on how to prepare the dead man's capital account, because while preparing dead man's capital account we will have to keep it in mind that suppose he is eligible to receive interest on capital, his share of profit till date of death, his share of reserves accumulated profits, his share of goodwill, We will have to keep it in mind that items of expenses and income, you will have to reduce it to the number of months he lived since last balance sheet date. അതായത് ക്വസ്റ്റ്യനിൽ തന്നിരിക്കുന്ന ബാലൻസ് ഷീറ്റ് ഡേറ്റ് തൊട്ട് മരിക്കുന്ന ദിവസം വരെ എത്ര മാസം ഇദ്ദേഹം ജീവിച്ചിരുന്നുവോ അത്രയും മാസത്തേക്കുള്ള ഇൻട്രസ്റ്റ് ഓൺ ക്യാപിറ്റൽ, ഇൻട്രസ്റ്റ് ഓൺ ഡ്രോയിങ്സ്, പ്രോഫിറ്റ് അങ്ങനെയുള്ളത് നമ്മൾ അതിനെ പ്രപ്പോർഷനേറ്റ് ആക്കണം. That is the point to be kept in mind. Similarly, his share of goodwill, his share of general reserve, ഇതൊക്കെ പുള്ളിക്ക് കൊടുത്തിരിക്കണം. കൂടാണ്ട് ഇദ്ദേഹം എന്തെങ്കിലും ഡ്രോയിങ്സ് സ്ഥാപനത്തിൽ നിന്ന് സ്വന്തം ആവശ്യത്തിന് എടുത്തുകൊണ്ട് പോയിട്ടുണ്ടെങ്കിൽ ദാറ്റ് ഈസ് ടു ബി ഡെബിറ്റഡ് ഇൻ ഹിസ് ക്യാപിറ്റൽ അക്കൗണ്ട്. ഇൻട്രസ്റ്റ് ഓൺ ഡ്രോയിങ്സ് ഉണ്ടെങ്കിൽ ഡെബിറ്റ് ചെയ്യണം. അങ്ങനെ എല്ലാം ചെയ്ത് വാട്ട് എവർ ഇസ് ദ ഫൈനൽ ഫിഗർ വി വിൽ ഹാവ് ടു give it to his legal heir or to his executor. So these all are the points to be kept in mind while while we start when we start learning the lesson. That is the next case of reconstitution, that is death of an existing partner. Okay, now we will see how to do the problem side of it. So I have selected a problem. You are given a balance sheet as usual. In this lesson, 90% case they may give you, especially for CBSE, 5 marks question asking you to prepare deceased partner's capital account. So we focus mainly on preparation of deceased partner's capital account. So we will see what is happening in the question. You are given a balance sheet of P, Q and R. Then with creditors, employees, provident fund, general reserve, contingency reserve, capital account balances, buildings on the asset side, investment, debtors, bills receivable, stock, cash. Now the partnership deed provided for profits to be shared in 2:1:1 ratio, and in the event of death of any of the partners, his executors will be entitled to be paid out what all things? Capital to his credit. So he is having how much? Who is no more? R died, I think. R died. Okay. Already having 10,000. Now his proportion of reserve at the date of balance sheet. Two types of reserves are there. General reserve, that is undistributed profits. Contingency reserve, again a reserve kept for meeting any crisis that may arise. So that can be distributed. It also includes his share that was created out of profit. Now his proportion of profits to the date of death based on the average profits of last 3 completed years, that figures plus 10%. And by way of goodwill, his proportion of the total profits for the 3 preceding years. Now the net profits were this much. R died on 1st July 2011. He had withdrawn 5,000 rupees to the date of his death. That is his drawings. So that is to be taken back from him. Now how this dead man's executor was settled? The investments were sold at par and R's executor were paid off. Okay. Now prepare R's capital account, also amount payable to R's executor. So we will see how is it possible to prepare the dead man's capital account, because he is no more and his family should be supported with what all funds he is eligible to receive from the firm. At the same time, firm wants to put a full stop with the dealings with that man. Accountingly, maybe personally the partners may be having connection. So we will see how to prepare the dead man. Here it is R, his capital account, and how to trace out the amount payable to his executor. Okay, so we will see how to trace out, how to prepare the dead man's capital account. Here dead man is R, so R's capital account, only one. Normally this is seen for 5 marks. particulars, journal folio, amount, date, particulars, journal folio, amount. Okay. Now what all things here are eligible? So here we will have a P is to Q is to R. R died and their ratio was 2 is to 1 is to 1. So that man's share is 1 by 4. Okay. Now the capital to his credit at the date of last balance sheet. So by balance brought down, how much? 10,000. Then his proportion of reserve at the date of balance sheet. Two types of reserves are there. General reserve, he is eligible to receive. So general reserve, what is the general reserve of the firm? Firm's general reserve is 8,000. Okay. Our share is 1 by 4. So 8,000 into 1 by 4 will give you ours general reserve, that is 2,000. Okay. Now what will you do? By general reserve 2,000. There was another reserve in the firm called contingency reserve that was also set out of the profit. So how much? 12,000. Upon that his share is 3,000. So you are writing 3,000 as his share of reserve by contingency reserve 3,000. Okay. Now his proportion of profits to the date of death based on the average profits of the last 3 completed years plus 10%. In this case, it is better to have your vehicle in the reverse gear. Average profit or loss. So when a death take place, normally the profit or loss account will not be prepared because death happens all on a sudden at some point of the year. So you fix a rate of profit based on some condition or criteria, and you will have to write profit or loss suspense account. It is not profit or loss account. By that time profit or loss account will not be prepared. So that is called profit or loss suspense account. Okay. Profit or loss suspense account. So average profits of last 3 years of the firm. How much? 16,000 plus 16,000 plus 15,400, that is 47,400 divided by 3, then only it will be average, right? So how much? 15800. 15,800 is the share of the firm, profit share, profit or loss. Now our share is equal to 15,800 into 1 by 4 is his share of profit. Now see, the balance sheet is given on 31st March 2011. This man's death takes place on 1st July 2011. So how many months did he live since last balance sheet date? That is, April full he lived, May full he lived, June full he lived. Correct? 1st July he passed away. So this is to be reduced to 3 months, right? Items of expenses and incomes, you will have to reduce it to the number of months he lived. So how much it is? 15,800. This is the point to be understood. 15,800 is the profit, estimated profit of the firm, that divided by, 4, that is into 1 by 4. I repeat, 15,800 into 1 by 4, which means his share of profit, that he lived for 3 months since last balance sheet date. So his share turns to be 987 rupees 50 paise. Now, upon this, plus 10% of that, plus 10% of that, so 98.75, add 98.75. So how much it is? 1086.25. I repeat once more, that is average profits of last 3 years of the firm. So average total is this much, divided by 3, you get 15,800. This is of the firm. Now dead man's share, 15,800 into 1 by 4, his share of profit, into number of months he lived. Last balance sheet date is 31st March 2011. Who told you? Just above the balance sheet it is specifically stated. From there he survived till 1st July. So how many months did he live? From 31st March, what is the distance to 1st July? So April full, May full, June full. So 3 months. So this profit is to be reduced to 3 months. What is 12? 12 months in a year, upon which 3 months he lived. So it comes around 987.50. Now the question has asked you to provide him 10% bonus upon that. So 10% upon this is 98.75. So 1086.25. Now you cannot write by profit or loss, but by profit or loss suspense, 1086.25. 1086.25. Okay, now the last item, by way of goodwill, his proportion of the total profits for the 3 preceding years. That is, goodwill is to be calculated on the basis of goodwill of the firm. How much? Goodwill, his proportion of total profits for the 3 preceding years. So 16,000 plus 16,000 plus 15,400. So 47,400. This is goodwill of the firm into his share. So how much it is? Goodwill of the firm into 1 by 4 comes around 11,800. Now we learnt that the method of goodwill in retirement and death are the same when goodwill of the firm is valued. So who is to be given 11,000? The dead man, that is to R's capital account. R died, right? So 11,800. Who has to give it? P's capital account debited, Q's capital account debited. That is, this 11,800, they will have to do it in gaining ratio. So naturally the question arises, what is gaining ratio? New ratio minus old ratio. So gaining ratio of P is equal to, gaining ratio of P is equal to 2 by, so before that we will write here, old ratio is 2:1:1. New ratio is, this man is no more, so 2:1. No other ratio given in the question. So gaining ratio of P is equal to new ratio, that is 2/3, minus old ratio 2/4. Now gaining ratio of Q is equal to 1/3 minus 1/4. So how much? 12 is the LCM. 4 2s are 8, 3 2s are 6, is equal to 2/12. Now here 12 is the LCM. 4 minus 3 equals 1/12. So gaining ratio is equal to 2:1, which means 11,800. 2/3 for the first man and 1/3 for the second man. So it comes around 7,900 for the first man and 3,950 for the second person. So the journal entry turns to be P's capital account debited, Q's capital account debited to R's capital account 11,800. Now how to post this in this ledger account, in this R's capital account? So we will see who is credited. R is credited. So come to R's credit side. What will you do? You will be writing by P's capital, how much? 7,950, by Q's capital, that is 3,950. It is not 7,950, 7,900. And 3,950. Okay, now we will see what happened. That is R died on 1st July 2011. He had withdrawn rupees 5,000 to the date of death. This is called drawings. So it should reduce whatever is receivable from him. We should collect it back. So 5,000. I repeat once more. His opening balance 10,000 given in the question. General reserve of the firm was 8,000 into his share 1/4. Now contingency reserve was there for the firm, that is 12,000. His share, so 3,000. Now profit or loss suspense. You cannot write profit or loss account because profit or loss account will not be prepared by that time. Death takes place all on a sudden, so we are estimating based on some estimates. So you will have to write profit or loss suspense account. Now how you calculated? Average profits of last 3 years of the firm. Average added together divided by 3. This is profit of the firm. Now his share 15,800 is 1/4. Now last balance sheet date is 31st March. He died on 1st July 2011. So how many months did he live afterward? April full, May full, June full. Correct, 1st July he passed away. So 3/12. This profit is to be reduced to number of months he lived, that is 987.50. And they had asked you to add 10% of that. So you added 98.75. 10% of this, 10% of this, so it comes around 1,086.25. and I told you, you cannot write by profit or loss account, but it is profit or loss suspense account. Now coming to goodwill. Goodwill of the firm is to be valued, that is by way of goodwill, his proportion of the total profits for the 3 preceding years. So how to calculate goodwill? Goodwill of the firm added together is 47,400. that's his share. So this turns to be R's goodwill, right? 11,800. Now R is to be given 11,800. Who has to give? P and Q has to face it. How they will divide? They will have to divide in gaining ratio. What is to be divided? This 11,800 is to be divided in gaining ratio. Now what is gaining ratio? New ratio minus old ratio. What is old ratio? 2:1:1. New ratio is 2:1. So P's gain is 2/3 minus 2/4 is equal to 2/12. Q's gain is 1/3 minus 1/4, that is 1/12. So gaining ratio is 2:1. So 11,800 was allocated in the ratio 2:1. So 7,900 to the first person and 3,950 to the second person. So how to? Journal entry is P's debited, Q's capital account debited to R. You are preparing R's capital account. R is credited. So come to the credit side of R. You will be writing by P's capital 7,900, by Q's capital 3,950. Now he has made a drawings which is stated in the question, that is sorry, the column has changed to drawings 5,000, so that you debit it. Now you see what is the amount to be paid. 10,000 plus 2,000, that is 10,000 plus 2,000 plus 3,000 plus 1,086.25 plus 7,900 plus 3,950 is equal to 27,936. That is the heavier total. 27,936.25 is the heavier total. Put the heavier total on both sides. 27,936.25. Here 5,000 is to be deducted from him. Okay, so the amount to be paid to him turns to be 22,936.25. So we cannot pay him. So what we are going to do? You will be writing to R's executor's account. Okay, this is how we will have to do small problems that are largely seen in from the lesson death of a partner. Normally we see 5 marks question that is largely seen, and you should be thorough in calculating. Keep it in mind, the tips for doing like this, items like interest on capital, interest on drawings, profit share, etc. You will have to reduce it to the number of months he lived since last balance sheet date. Suppose it is the death is happening on 12th of July. Okay, then you will have to do it like April is 30, May is 31, June is 30. So July 13th he is no more, so that you will have to do it in number of days. So suppose the days are 88, it will be 88 by 365. So what is 365? 365 days in a year. So this is how you will have to do problems wherein you are asked to prepare the dead man's capital account, and whatever is payable is paid not to the dead man but to his legal heir or to his executor. Okay, so this is how you will have to do. And when we speak about reconstitution, children, we have so far come across admission, retirement, death, and to the last topic, that too also we see for 5 marks normally, that is a reconstitution takes place when a change in profit sharing ratio takes place between the partners. That is a change in PSR amongst partners means, suppose they were sharing in the ratio 2:2:1, they have decided to make it 1:2:1. When such reconstitution takes place in profit sharing ratio, when a change in PSR takes place, there can be partners who may be losers, there can be partners who may be gainers. So we will have to apply gaining ratio. Then we will have to see who is the loser, who is the gainer, who is the sacrificer, who is the gainer. Now the sacrificer will have a negated value if you apply gaining ratio formula, that is new ratio minus old ratio. Now what all things they are eligible to receive, that is to be paid to them, that is paid to the sacrificer by the gainer proportionately. So this is how normally we see for 5 marks. Normally his share, I mean you'll have to trace out the value of general reserve, goodwill, suppose some negated items like miscellaneous expenditure like advertisement expense are there, that is to be set off from the payable value, and the final value you will have to reach at, and upon that the proportionate share of gainer will have to give the loser, journal entry being gainers capital account debited to sacrificers capital account. So we will see without adjusting, without changing the book values or change in accounts. That is the most popular variety that is seen. A change in PSR will result in a reconstitution of the firm. In case of change in PSR, it is important to determine gaining ratio and sacrificing ratio. Gainer should compensate sacrificer by paying them appropriate amount of goodwill. Calculation of gaining ratio and sacrificing ratio, these all are the journal entry, the learning areas expected from this lesson. Calculation of total adjustments to be made, passing of journal entries without affecting book value. Now we will see how is it possible. I have selected a problem, a simple problem. The case is like this. A and B were partners in a firm sharing profits in the ratio of 3:1. With effect from 1st January 2003, they agreed to share profit. They changed their profit sharing ratio to 2:1. For this purpose, the goodwill of the firm was valued at 50,000. General reserve appears in the books at 40,000. Partners neither want to show goodwill in the books nor want to distribute the reserves. You are required to record the change by passing a single journal entry. So what is the reconstitution that had taken place here? They shifted from 3:1 profit sharing ratio to 2:1 profit sharing ratio, which resulted in the reconstitution of the firm. So as a part of reconstitution of the firm, they valued the goodwill of the firm. They came across general reserves. So these all are the things to be considered. Now the total value of this, upon that the proportionate share of gain to be taken by the gainer from his capital account and is to be given to the loser or the sacrificer. So how is it possible? We will see. So in this case what we will have to do is, first we will have to trace out what is gaining ratio. Gaining ratio, what is the formula? New ratio minus old ratio. So what is new ratio? They have decided to make it 2:1. What is old ratio between these people? That is 3:1. Now what is the gaining ratio? Gaining ratio of A is equal to 2/3 minus 3/4. Gaining ratio of B is equal to 1/3 minus 1/4 is equal to 12 is the LCM. 4 2s are 8 minus 3 3s are 9. So what is happening? 1/12, which means he is a loser, sacrificer, because of this rearrangement. Now 12, 4 minus 3 is equal to 1 by 12. So if put in brackets, it means a negative figure. If put in not in brackets, means it's a positive figure. Now what all things are to be given as a part of reconstitution? They revalued goodwill. Goodwill of the firm is 50,000. They came across general reserves, that is 40,000. So how much? Totally 90,000. Upon this, proportion of gain is 1 by 12. 1 by 12. So how much? I think it is 7,500. Now what is the formula to be applied? Gainer will have to take it from his capital account and will have to give it to sacrificer's capital account. Okay. So who is the gainer here? Second man is the gainer. No, second man is the gainer. He is with the positive figure. So who is that? B. Right? Who is the loser? Sacrificer. This man is the loser. Who is that? A. So to A. So what is the journal entry turning to be? B's capital account debited to A's capital account being journal entry passed in connection with change in PSR. Okay, how much is the figure? Figure is 7,500. I repeat once more. See, change in PSR is a case wherein the partners mutually agree to have a change in the profit sharing ratio. Now, in case of change in PSR, it is another case of reconstitution of the firm. What we will have to see is when we go through previous question papers, it is largely seen wherein you may be asked to pass a single journal entry to accommodate this change in PSR without affecting book value. So what all things they valued, whatever is to be considered, you come upon the amount finally to be considered. In this case, they valued general reserve, they valued goodwill, they came across general reserve, they came across goodwill, which totally came to be 90,000, right? 50,000 plus 40,000, 90,000. Now upon this, you will have to apply the gaining ratio. What is gaining ratio? New ratio minus old ratio. So this man is having a negative figure, which means he is a sacrificer. Now this man is having a positive figure, which means he is a gainer because of this change in PSR. Now what is the formula to be applied? The journal entry technique to be applied, that is, gainer will have to take it from his capital account and will have to pay the loser. Who is the gainer? B is the gainer. Who is the loser? A is the loser. Journal entry turns to be, what is the journal entry? B's capital account debited to A's capital account. So from where the 7,500 came, 9,000 is the value to be considered. Upon that, share of gain, what is that? 1 by 12. So 7,500. Now B's capital account debited to A's capital account, 7,500. Okay. So this is how you will have to see two problems related to change in PSR. In fact, these two are very small lessons. When you go through the previous question papers, you can see problems for 5 marks are largely seen about 92 to 95% questions in state boards or CBSE or ICSE. You can see it for 5 marks, wherein they will ask you to prepare the dead man's capital account in the case of death of a partner, and just pass an adjusting journal entry just to show this effect of this change in PSR by considering all the items without affecting book values is another variety largely seen in the case of change in PSR. Now questions relating to this area, I have selected one more problem and is given in self practice with solutions. You can go through that and you can see how is it possible. Now before wrapping up, we will see to what is happening in change in PSR. It's a situation wherein some may gain or some may lose because of this rearrangement. Now it will result in a reconstitution of the firm. To assess the value, you should know the gaining ratio and sacrificing ratio. Gainer should compensate sacrificer by paying them appropriate amount of goodwill. Now calculation of gaining ratio and sacrificing ratio, calculation of total adjustments to be made, and how to pass journal entries without affecting book values are the areas to be seen in this lesson. So thus we have come across a major area in partnership, that is we just so far completed basics and we completed the entire main head of reconstitution of partnership, that is admission, retirement, death and change in PSR. Now the last topic remaining in the lesson partnership accounts is dissolution of partnership firm, how to accountingly deal with dissolution of the firm. Okay, that we will see in the coming days. Thank you. Thank you.
Logic, School of Management. It is simple logic.